So guys, welcome back. Sive is here with the forexpeacearmy.com. Let's have a look what we have on the euro currency, what's actually is going on. In general, performance that we see is not surprising. We talked about this in the weekend. We said that if conflict will start, definitely will push the euro down, and not, better to say, not the euro down, but the dollar up. We also mentioned some patterns. Cross-market analysis suggesting that it should happen, particularly speaking, some patterns on the dollar index, on the Great British pound, and actually we decided to stay aside from any long position on euro. Now what we have, in fact, this drop that we have currently, it's not just about running in the safe haven. Euro currently is getting double impact. First is a pure demand for the dollars. Second is a reassessment of the impact on the European economy of the high prices of the hydrocarbons. What will happen with the euro economy if we will see that gas price now has jumped recently on average 25%. In the moments it was around 40%. Crude oil is rising. Everything is becoming more expensive. Currently the production of the liquid gas stopped in the Qatar. Europe has blasted the Russian pipes, so they have no other sources to get hydrocarbons except maybe making the repurchase of the same Russian oil and gas, but with the additional haircut from the India. So India could buy a lot of Russian energy and then resell it to the Europe. That's the only way that they have. Iran is also now closed for delivery. This is really the headache, and currently the major question is how long this conflict will last. In the Pentagon right now starting searching for the goals of the release. So currently everybody accused Vance that he has pressed on Donald Trump together with Israel and Saudi Arabia to strike Iran, and now many insiders of the Pentagon accused him. Donald Trump sits on absolutely on the nervous and with this irrigation on the neck, on the skin, on the neck. So that definitely things are going not in the way as they would like to. Things that Trump told about the conflict that it could last 3-4 weeks, guys, this is the bluff. So they can't hold this conflict for 4 weeks just because they have the arsenal on the mobile devices on its air carriers, on the ships. They can't carry a lot of arsenal. They have missiles for maybe 4 or 5 sessions, 5 days. Then they have to retire and actually retreat and add more arsenal. Anti-missile system on the Middle East, on the Qatar, on the Emirates, they also is limited. And within the week of the conflict, it will be a decisive moment in this weekend or in the beginning of the next week what Iran will do, because Israel will stay one by one with Iran in the moment when the United States will have to step back and actually wait when arsenal will be delivered. So, but this is just about the overall situation that we have. In relation to the euro, particularly this moment is crucial. If situation will normalize fast without big impact on the long-term prices of the energy, here's reversal also will come. But until we will get this news, or until we will see definitely that conflict start fading, euro remains under pressure. And in current circumstances, I wouldn't be surprised if we will see even deeper action. For tomorrow's session, I would focus on the 1650 area, with a few reasons. On the technical side, we're getting currently a Joe Napoli stretch pattern, because we're coming to the daily oversold right at the fib level. It is not some big pattern, but it could trigger some pullback up from this area. Overall situation looks not really great, just because market almost erasing the fast upper leg. This is always not a good sign for any bullish performance. It also hazard to put this butterfly in the question very soon, because if market will move slightly lower and taking out with these lows, well, this will be not the butterfly anymore, and we'll have to search for something else. I already would say that this performance is not good for overall bullish context in this pattern, and that particular might be the reason that could trigger the deep retracement. Because if you remember, within the actually every time when we talk about monthly chart, every time we're told that market stands at the monthly OP target, it's around confluence area, but for the 3-4 months, market hasn't shown any moderate pullback that usually should happen in such circumstances, at least the 30% retracement. Euro currency was towering and hasn't shown it. Maybe particularly this precedent will be the reason for that. It will trigger this retracement. We will see. Currently, it goes in this way. What else we could consider in the nearest moment? So on the 4-time frame chart, we have this downside ABCD that leads us to the OP target. So for scalp traders, those who will consider taking scalp long positions on the 5-minute chart, for example, you need to wait when the market will reach this area, 1613 approximately. This is some kind of the advanced techniques from the Jed Napoli when he talked that if market gravitating to some target that stands slightly below the level, the touching of this target doesn't mean the breakout of the level. So it is normal, and overall the following pattern, whatever you expect, might start once the target will be reached. So it means that currently we're watching for the reaching of the OP, and then pay attention to appearing some reaction on this support. Maybe this stretch pattern starts to work. Definitely this is not the point to go in short. It's not very good area. Finally, a small pattern that we could consider will be based on this downside action. I suspect that it might be not bad thrust, taking into consideration overall background. Appearing here momentum bearish trade might be really interesting. So for instance, on the hourly chart, once we will get the pullback up from the 1613 in the nearest fib resistance level, it might be a good opportunity for momentum bearish trade. So we could sell here, aiming on the downside continuation. Either from this level, maybe from another one. We will see how reaction will stand. One of the patterns that you could consider once market will reach the 1613, maybe it might be kind of the hand and shoulders pattern, something like this. If you have plans to take the long position on the 5-minute chart, for example. Our suggestion on Friday, based on this triple two, you can see it was some kind of the prophecy. So it was kind of the predictions of the possible just collapse right on the triple to sell. So anyway, our situation for trading purposes now has become very interesting. We are getting a lot of patterns. That's actually what we want to get, because in previous sessions you can see that it was really the nightmare for trading nothing. Currently we are getting volatility, and that is great. So that's probably all for now. Let's just see for progress and return back to discussion of the subject tomorrow, particularly speaking how market will respond to the 16 area.